Pacific on C-SPAN 3. Washington Journal continues.
Well, joining us from our New York studios, a familiar face to anyone who's ever turned on CNBC, Maria Bartiromo, who is the anchor of Closing Bell on that channel. Maria Bartiromo, I want to start by asking you about two headlines this morning in the Wall Street Journal. They're side by side. Numbers augur trouble ahead. This is about the drop in durable goods that was reported yesterday. And the headline next to it is Obama trumpets revised job data saying that we're adding jobs. How would you describe our economy today?
Well, I think right now the economy has worsened. You've got the jobs problem pretty severe and persistent. 8.1% of the country without a job, and of course we know that that does not include those that have simply stopped looking. So the unemployment rate is more like 11 or 12% of the country. You mentioned the durable goods numbers yesterday. That indicated that big ticket items, sales of things like washing machines and other big ticket expensive items have also slowed. People are waiting to put big money down on important purchases. And then of course you've got the GDP numbers yesterday, which came out and showed that growth was revised downward. Economic growth was revised downward to show a growth number of 1.3%, which is pretty anemic. That's down from 1.7%. So from that report, we see that things have actually worsened in the last couple of months. And then you've got the issue of businesses really sitting on their cash. You know, right now, corporate America, frankly, is pretty strong. I mean, corporate America over the last 4 years, ever since the financial crisis, has really slimmed down, and companies, large and small, are lean and mean. They are looking at cash on the balance sheet, profitability, because they've cut so much. They've cut to the bone. They've cut jobs, they've cut investment, they've cut R&D spending. So they're sitting on some $3.6 trillion in cash on balance sheets. The issue is that they're not spending it. And they're not spending it because there's so much uncertainty in this economy. You know, they don't know where tax rates will be next year. They don't know what the regulatory environment will look like next year. They don't know what demand will look like next year. And so because of these uncertainties as a result of the fiscal cliff and the fact that we haven't had any policies really coming out of Congress and the White House to really fix this. It's all been monetary policy. The Federal Reserve has really been the only one out there, the only game in town to really provide stimulus for this economy. We don't have an energy policy. We haven't had a budget in 3 years. So, you know, as a result, businesses are waiting to see what happens with this election, and they're waiting to see, you know, what their lives will look like, tax rates, regulation, etc. They're upset by the health care expense, so they're waiting until after the election to really decide if, in fact, they will hire new workers and put new money to work. So I think we really are in standstill mode, unfortunately, in the U.S. economy right now.
Another story, this from Politico this morning, and here's the headline: Wall Street braces for an Obama win. Mitt Romney was Wall Street's dream candidate, a former private equity executive committed to lower taxes and less regulation, who would never rip bankers as fat cats, as President Barack Obama famously did. But now many masters of the universe concede they may not get their man. Across Wall Street and the broader landscape of corporate America, even strong supporters of Romney acknowledge that swing state polling numbers in the direction of economic data and markets suggest it's time to brace for a second Obama term. And I want to ask you also about using the word brace in this story.
Well, yeah, I mean, I think that, you know, the president has had an antagonistic relationship with business. I think that's pretty clear. And so he did, over the last several months, I think, lose the independent vote and certainly the business vote. And so if the numbers show that he's actually winning, I could understand that now they're disappointed because they were counting on some competition. But I don't think you can really tell right now. I mean, it's hard to know how accurate these polls are. In some cases, I think the media is polling Democrats. And in other cases, I think people, they don't necessarily tell you what they're thinking and what they want to do. So, it's probably likely that that we see a very, very close race. It could go either way. I'm just not sure right now how accurate those polls are. But I understand the word brace because the business community has, I think, looked at this presidency and been disappointed because what I'm hearing from CEOs, and I'm able to speak to business managers and CEOs really all day long on CNBC and certainly on my program, which is in the afternoon from 3 to 5 in the afternoon, and what they tell me is that oftentimes they're asked to visit the White House. For example, when the president was, selling his health care package, he invited a number of the health care CEOs to the White House under the idea that he wanted to get their input and he wanted to hear what was going on in health care and how the legislation should change or be altered to sort of address some of the issues that he was going to hear from them. But what I heard from virtually every single healthcare CEO that went there is that they arrived, they did a photo op, they took some pictures, the president spoke to them, gave a speech basically, and then left. And so what I'm hearing increasingly is that he's not necessarily listening to the executives that go to his office. He has his own ideas, and regardless of whether or not they come there and explain their so-called plight or what would like to see in order to actually put more money into the economy and hire new workers, he's not listening to them. And I think that there is some truth to the idea that the president has a very small circle of advisors, and that's who he decides policy with. He doesn't really take the input of business people who are on the ground, who are knee-deep in working on this economy and hiring and have the ability to hire. So I do think that the business community has been disappointed with being unable to have a voice in any way, and so they're in lockdown mode.
And just to reinforce what you just said, from Bob Woodward's new book, The Price of Politics, he recounts a conversation between former Verizon CEO Ivan Seidenberg and Valerie Jarrett from the White House. And here's Ivan Seidenberg talking to Valerie Jarrett, according to Bob Woodward. "With all due respect, we will be here when you're gone. I'm a perfect example of that," Mr. Seidenberg said. "So you have to realize that this very progressive agenda and this once-in-a-lifetime moment for this man in this world can be lost because guys like me can hunker down and wait you out."
Yeah. I've heard the same things. I've heard that at the end of the day, the president likes to appear like he's getting input from the business community, but he really doesn't. He doesn't listen and act on that input. Because he has an ideology of the solutions that are needed for this economy, and that's really where he's focused, rather than speaking to business people saying, okay, here's what the demand picture looks like, here's what we need to ensure that we will put more money into the economy. I think there's a real debate right now and a division, frankly, in this country about the solutions to the way forward. And I think the business community believes that in terms of the way forward, you need to create an environment that is actually favorable for business so that they will put their money to work in the economy. One key example is the tax on profits that these businesses, American multinational businesses, derive from overseas markets and bring back here. This is a big debate, and business feels that they are taxed twice. They're taxed in the local market, whether it's Europe, Asia, Africa, etc., and then they bring the money back to the U.S. and they're taxed again by the U.S. And there's a big movement by executives today to eliminate that second tax so that they could bring some of the money back into the U.S. rather than investing it in plants and people overseas. But, we've been unable to see any change on that. In addition, small business, I was with the Small Business Administration and a number of small businesses, and largely these businesses are private businesses, smaller businesses, not multinational large companies, but this really is where the job creation in the country comes from, small businesses. And what small businesses are saying is they oftentimes pay the ordinary income tax rate as opposed to the corporate tax rate because they just are smaller businesses. They have a smaller number of employees, and so they fall under the ordinary income tax bracket. So when we talk about higher taxes on millionaires and we talk about higher taxes on anybody making more than $200,000, it's not just individuals that get impacted by that, it's small businesses. So if small businesses are expecting their tax rates to go up to, 36 or 39%, they are going to wait. They're going to wait to put money to work. They're going to wait to hire anyone because they want to make sure they understand what their expense side of the business looks like. So you do have a whole portion of business, small business, as well as multinational companies that get truly, impacted by these tax rates and certainly by this uncertainty. And so they probably will be a lot more reluctant, less willing to put money to work, which of course is a problem because we need their money to work and their hiring in this economy in order to really see growth. At the end of the day, we need job creation and we need economic growth, neither of which are happening because of this uncertainty out there.
Maria Bartiromo, every afternoon on CNBC. She is the anchor of Closing Bell with Maria Bartiromo. She's also the host and managing editor of the Wall Street Journal Report, which airs Sunday evenings at 7:30 p.m. And she also writes a column monthly for USA Today, joined CNBC in 1993, first journalist to report live from the floor of the New York Stock Exchange in 1995. Lucia from Lansing, Michigan, you're our first caller up. Please go ahead.
Hi. Yeah, it's Lucia.
Lucia, thank you.
I'm great. I'm happy to speak to Maria right now because she exactly in the last statement she made is exactly where I'm at. In 2008, we were about to expand our business to a second restaurant, but we couldn't because of what was happening on Wall Street. So then we waited. We figured, well, give it a year or two and the president would turn it around. He didn't turn it around. I was very happy that my brother's job at GM got saved by Barack Obama, but the fairness that he talks about is crap because she has said it exactly right. My restaurant has to make $1 million for me to pay all the employees, the 33 taxes we have in business, and then me and my husband only make $100,000. He and his wife only make $100,000. I pay 39% in taxes, which is $30,000 or more, and he pays $3,000. How is that fair?
All right, thank you. Maria Bartiromo.
Yeah, I mean, I think it's unfortunate because you have a very, very large swath of people that are getting impacted by significant taxes. When you look at the numbers, it just, it's debatable on whether or not this group should be combined with the so-called millionaires and billionaires. I mean, raising taxes on people, individuals making more than $200,000 a year, that's a risky proposition because, frankly, anecdotally, I have friends, a good friend of mine works for government, actually. Her husband works for government, and collectively they bring in about $250,000. They've got 3 kids. And by the time they pay for food and for, the kids and, doing everything, gas and doing everything sort of the necessities that they need to do, there's nothing left over. I mean, they're living, pretty much, close to paycheck. Now, don't get me wrong. I'm not saying that $250,000 is not a lot of money, because it is. But when you put the $250,000 group in the same group as the $1 million and the $1 billion, I don't think that's right. I mean, it doesn't add up. And I think it's those people, which is a big part of this country, it's those people who are going to pull back. And they are going to say, okay, I don't have the extra wiggle room to hire a new worker. I don't have the extra wiggle room to buy a new car, to buy a washing machine. All of the things that sort of, keep our economy chugging along. And so the taxation debate is real and it's impactful, and this is a pocketbook issue that we're all talking about, and this is really one of the big things that is dividing the country.
Bill is in Buzzards Bay, Massachusetts, on our Republican line. Hi, Bill.
Yeah, good morning. Maria, young lady, I can remember when you used to do news cut-ins on CNBC at all hours of the morning, 2 o'clock in the morning, and there's
Yeah.
Maria doing it, and I swear if you were a guy, in your spare time, you would have done brake jobs out in the parking lot. But to my point, I'd like to talk about the national debt, and the dumbing down of America, and how I don't think that people can grasp what $1 trillion is, or not even $1 million. And what I'd like to offer this suggestion, and I'd also like your opinion on what I'm about to say. If you down the road, or just today, were to take out a dollar bill, and it's 6 inches wide. A dollar bill is 6 inches wide, and when the federal government spends a dollar bill, that they borrow 2 5/8 inches of that dollar bill. That only leaves 3/8 of an inch before we meet the cliff. Now, something visual like that might cause people to think a little bit longer as to.
All right, Bill, we got the point. Maria Bartiromo.
Yeah, no, I think that Bill is onto something. It's very hard to get your arms around what $1 trillion is and really, relate it to yourself. But I will say this. I mean, we face a debt in this country of $16 trillion. And, it's okay when things are going well. But, at some point, when you are beholden to that lender, in this case the Chinese, you make concessions. And oftentimes that lender will make demands. So at some point, who's to say we don't hear from the Chinese who might say, look, yeah, we'll buy your debt, we'll buy your treasuries, etc., but we want a much higher interest rate. And so all of a sudden interest rates spike. The Federal Reserve has been providing so much stimulus to this economy, and as a result, interest rates are, staying at very rock bottom levels, and the Fed has told us that will be the case until 2015. But don't kid yourself. When interest rates do finally start to move, and it could happen at any time, with or without the Fed, because of the lenders making demands on us, interest rates will spike at a very, very sharp level. So at some point, there will be problems in terms of the Federal Reserve stopping any runaway rate move. And so that's why we desperately need fiscal policy. We do need tax reform. We've been talking about tax reform for a long time. Why is it that there is an opportunity for certain people to manipulate the numbers and pay a much lower rate than others? Well, because there are too many loopholes. And, a lot of experts, economists say that if you were to lower corporate taxes to a level that makes it a favorable environment for business, business will start hiring again. And if you lower corporate taxes, you could then eliminate the loopholes and some of these easy ways for people to pay much lower rates. And that would broaden the tax base and lower the rate. Something like this is an idea that has been bandied about for a long time, and yet no one is moving on it. And even the president, who complains that people don't pay their fair share, hasn't changed the tax code. So, to complain that people are not paying their fair share and yet not do anything about the tax code, to me seems strange. So I do think that the deficit is a real issue. You cannot borrow forever. Look what's going on right now as we speak in Spain and Italy and throughout Europe. When you have a country that has debt of 120 times its economic growth, you're walking on eggshells. And so I think at some point this debt will come back to haunt us. So we do need to recognize that you can't borrow forever. I think we've all learned that from the financial crisis. We've learned that from Europe. And by the way, when you start implementing sharp austerity, which is required if in fact you have to cut back and get your arms around the debt, you'll see social unrest. Throughout Madrid, as we speak, you've got protesters, pouncing on the floor of Parliament because they don't want the austerity. We cannot get to that point in America where you have protesting and social unrest. That's a dangerous scenario. So I think at some point we need to hear our leadership recognize and communicate to the rest of us that, yes, this is an issue, but we are handling it and we've got our arms around it. We haven't really seen that.
And the Financial Times this morning has this story: candidates fail to flesh out deficit details. We'll show you that article. And we'll also show you the current unemployment rate, 8.1%. Current U.S. public debt, $16 trillion. Maria Bartiromo, with all these numbers and worries, et cetera, why is the stock market then at 13,500 points? I mean, should we look at that as an indication of economic strength or health?
No. There's a real disconnect going on in the stock market versus the real economy. The stock market is trading on the Federal Reserve and the central banks of the world providing stimulus. I mean, remember, this latest act by the Fed to provide so-called QE3, or the quantitative easing, is completely open-ended. So the Federal Reserve is going to be buying mortgage-backed securities to the tune of $40 billion a month, and they've made it very clear that they're going to keep interest rates near these levels at rock-bottom rates until 2015. So savers are really getting the short end of the stick, because if you have your money in a money market account or in a simple savings account, you're getting no yield. In fact, when you adjust for inflation, you're actually losing money. So there aren't any alternatives to stocks. And so if you've got your money in a money market account and you're basically losing money or you're not getting any yield, what's the attraction to keeping your money under the mattress, keeping your money, in these very low-bearing interest rate accounts? It's much a bigger potential for reward if you're putting your money into the stock market, particularly companies that pay dividends. And in some cases, you've got, competitive yields, competitive dividends of 3, 4, 5, 6, 7%. So money has moved. It's shifted into equities because that's the only alternative left for any yield. Everybody's searching for yield and for some kind of an interest rate because rates are at such rock bottom levels. So there are unintended consequences of the Federal Reserve's monetary policy, which is why, again, we really need a fiscal policy. And of course, this fiscal cliff that we're talking about so much is also very dangerous, because what you've got going on here is tax cuts, which will expire at the end of the year, simultaneously when spending programs will expire at the end of the year. So Americans will face, and this is really middle America, those people in the middle, $200,000 or even lower in terms of income, they are going to face the highest tax increase since World War II. That will happen at the end of the year, automatic. That happens January 1st, unless these guys get together and do an extension or do some kind of a grand bargain, which obviously is not happening because there's such upset and rancor and just hatred between them. They can't make a deal. So the tax cuts will expire simultaneously with the spending programs. The spending programs expiring is another problem, because there are federal programs for defense companies, healthcare companies, transportation companies. They get federal dollars so that they could do these programs. Those programs are going away January 1st. So these companies, including defense, healthcare, transport, they will have to notify employees by November, the end of October. They're going to have to notify employees that their jobs are cut. So in addition to the largest tax increase that we're going to see since World War II, we're also going to see a host of layoffs at year end, all as a result of this ignoring of the fiscal cliff. which is why there's so much talk about it. So, you know, I do think that we are walking on shaky ground, and unfortunately, the president has been unable to really provide the leadership required to get these two groups together, the right and the left. You know, part of, you know, the job of the commander-in-chief has to be to compromise and bring these two groups together. And so, you know, for Congress to say, look, we're going on vacation for 5 weeks, and then come back and say, oh, we're going away again until after the election, with nothing done about the fiscal cliff, is truly irresponsible. And the fact that the leadership, there's no leadership in terms of bringing these two groups together, is very sad, and it is unfortunately leaving all these people who are going to get cut in terms of their jobs, and all these people who are going to swallow this large tax increase hanging in the balance. I find it extraordinary.
Maria Bartiromo, this tweet for you from Wild and Wonderful. Maria, what changes to the tax code would have the greatest positive impact on truly small businesses?
Well, I think small business is worried about falling under that ordinary income level. Their taxes will go up. I think the biggest impact would be a change in the tax code, including lowering corporate taxes, but eliminating the loopholes. And that would eliminate the opportunity for example, private equity and hedge fund managers to file under capital gains, which of course is much lower than ordinary income, and have to go to ordinary income. If you lower the corporate tax, you create a better environment for business, and perhaps if they don't feel this strain on their shoulders that they're going to see higher expenses in terms of their tax rates, they will likely put that money to work in terms of hiring more people. So I think the change in the tax code to lower corporate taxes is one very significant idea. Remember, these companies are also facing an increased fee, an increased tax surrounding health care. And that's another issue. I hear all the time from small business that the expense of health care has risen considerably just, you know, recently, and it will continue to rise. So if we were to actually see a change in that health care cost, that would also eliminate a big pressure for small business, because what I hear consistently is upset over the tax code and upset over health care expense, as well as secondarily the regulatory environment, which of course includes a handful of fees associated with various agencies that oversee these businesses.
Next call from Maria Bartiromo of CNBC comes from Boston. Gerard, Independent Line. Hi, Gerard.
Hey, hi, Maria. Listen, the way
Hi,
I look at this debt thing, right? You need to protect the money, to bring the debt down. The economy would be saved. You know what I mean? By just protecting the dollar. But my question is, all right, so the government takes in like $4 trillion in taxes, right? And why are they and they're borrowing money from China, like 10,000 more. Check that all out.
Hey, Gerard, just go ahead and finish, please.
The $1 trillion, right? Like, so they take in $4 trillion, and they're borrowing like $6 trillion a year for these programs, like to give to Israel and the foreign aid in Egypt. Now, who's giving these loans? That the China's buying treasury bonds? Is this how it works?
Yeah, well, I mean, you have China consistently buying our treasury. And the truth is, right now, there really aren't a lot of alternatives out there. I mean, when you look at the world today, the U.S. is sort of the best house in a bad neighborhood. You know, Europe is a mess. China is slowing. You know, you have the law of the land in the United States. So for the Chinese, and it's an attractive alternative. But, you know, when you're on the other side of a trade and you know that your competitor or the person you're buying something from is under pressure financially, you sort of hold the cards in some regard. And so you just don't want to get to a point where the Chinese say, look, we'll do this, but we want much higher interest rates. And so that's when rates could spike, really impact the economy, you know, be much costlier for average folks, because rates will follow suit, and we'll see a spiraling out of control on that. So that's why you just don't want to have some other player having the cards like that. And in addition, you really need to see economic growth in terms of raising revenue for this country. And we're seeing growth contract. I mean, you've got 1.3% growth. Sure, that's okay, but it's just okay. It's not where we should be in this kind of recovery, at this moment in the recovery, based on a typical recovery. Now, next year, as a result of going over the fiscal cliff, and that of course, is the expiration of the tax cuts and the spending programs, most economists say we will see a recession next year in 2013 because of those layoffs I mentioned and because of that increase in taxes. So if we were to see a recession in 2013, there goes growth out the window, and once again, we will see interest rates react. So it's all about the bond market. It's not necessarily about the stock market as much as it's about the bond market, where everyone's focused on interest rates and the possibility of a spike.
Jim is in Spartanburg, South Carolina, Republican. Hi, Jim.
Good morning. How are you?
Good.
Two things I don't understand, Maria, about this election, and I wanted your input. Romney pays taxes in 2011 at a marginal rate of, 14%. And the Obama camp assailed that. And when they're the ones, you just pretty much stated a minute ago, created that tax rate. They're the ones who kept the tax rate going. They could have done something about it, but then they assail Romney, who's just complying with the tax code that he created. And secondly, how can Bill Clinton get away with claiming that the Republicans were the ones who deregulated and created the real estate and financial problems when he repealed Glass-Steagall in 1999, and that was the underpinning of the whole, in a way, of the whole problem. I would say it's a chief point or two, because in 10 short years, all the big banks, almost all of them, went under. And so I just wonder how he can get away with that, and that was one of the hallmarks, if you will, that gave that campaign a bump that night, that Bill Clinton speech. Does he just not want to admit it, or does he just know that people won't care or follow and research this, or how does he make that statement in front of everyone?
Maria Bartiromo.
Well, I mean, we're in political season, right? I mean, it's political football. It's all politics. And so, number one, on the tax code, yes, that's what I just said. I agree with that. We could have seen change over the last 3 years. If we're going to complain about people not paying their fair share, change the tax code. It's all legal. If a money manager can use whatever loopholes are available to him or her to lower their tax expense, of course they're going to do it. Anybody would. It's not it's not illegal. It's what they should or could do because of the loopholes available to them. So again, I think you need to lower the corporate tax rate and broaden the base by eliminating those loopholes so that everybody is sort of on the same playing field, but we haven't seen anybody do that. And in the last 3.5 years, we're hearing a lot of attacks on wealth, attacks on business, attacks on, those people who supposedly aren't paying their fair share, and yet there's nothing anyone's doing about it. So that is sort of an open question. Why? And I guess it's because, they want the constituents' vote of that person who is actually paying a lower rate. As far as Bill Clinton, Bill Clinton is a seasoned, amazing politician. I mean, he's loved on both sides of the aisle. And so I think, he came out and talked about the economy, and I think what he has going for him is the record of not only balancing the budget, but having a budget surplus. Let's not forget that that was a moment in time when Bill Clinton was overseeing this great country, when we were in the dot-com boom, when we were at, a new era going into the year 2000. And so, the 90s were very vibrant. So you're really talking about a different economic time where he was overseeing. But you can't take away from the fact that, he oversaw a balanced budget and a budget surplus, giving him that kind of credibility in terms of economics. Now, I will say this. I interviewed Bill Clinton back in June, and I was talking to him about the fiscal cliff. And I said straight out to him, and you could pull up this interview, it's online at CNBC.com, but I said to him, so what do you think about the fiscal cliff? Should the tax cuts be extended and the spending programs be extended? And first he answered something sort of political, and then I followed up and I said, so does that mean the tax cuts should be extended? And, he was sort of like backed into a corner, and he said, well, yeah, everything should be extended because we're talking about an environment right now where we're in a recession. And so we ran that interview, and then a couple of hours later, I got an email from his camp saying, oh, he has to retract something that he said. And I said, what? I said, you know, Bill Clinton is a smart politician. He doesn't say anything that he doesn't mean. I mean, what are you retracing? And he said, well, he wants to say that he believes that the tax cuts should only be extended for people making under $200,000. And so then I called them later and I said, what's going on here? And apparently the Obama administration called Clinton's people and basically said, look, you're not on the talking points. You're not on the narrative. You need to go out and take that statement back. And it was a pretty big brouhaha over the tax situation. But I think it's pretty clear where Bill Clinton stands. He thinks that everything should be extended, even though right now during political football and 40 days out of the election, I don't think he'll repeat that right now.
Maria Bartiromo, when you have that kind of an interview and that kind of a follow-up to that interview, is it tough to get a second interview with him? Absolutely.
I think right now the president is not going to even go down that road and to talk about taxation because he doesn't want to make any mistakes. You know, one thing about Bill Clinton is he says what he feels for the most part, and so he won't come out and say something to your face that he really doesn't believe, and so he's avoiding that conversation right now.
Stillwater, Oklahoma. Hi, Jim. Please go ahead with your question.
My question is more of a statement than a question, but I have a small business and have had it for over 50 years, and I'm now paying 5% income tax, or tax on the income, versus 35 back in 2008. And this president has done nothing to stimulate the economy for the small businessman. And we're sitting here running in idle right now. We had to reduce our employees, and I'd love to step up my employees again, but I can't do it. And under the way he's run it the past 3 years, because his motivation is stimulating jobs in the government, not in business. And it's the business jobs that pay the taxes that allow for the government jobs.
Maria Bartiromo?
Yeah, I mean, this is, I think, the scenario that I've been laying out as well. It's what I'm hearing across the board from business people today. Again, it's not just the tax rate, but it's the cost of health care. It's the cost of regulation. It does feel like there is an ideology to just make government bigger and not necessarily do enough for businesses to feel like they want to or can hire new workers. And this will be a problem because, you know, we have to ask ourselves, what is the priority right now in this country? Is the priority to create jobs and get economic growth moving again? If that's the priority, well, we need to come up with ways to do that. And that doesn't include, you know, attacking wealth and attacking business and with scare tactics that, well, you're going to pay your fair share and taxes are going up, because they will go in lockdown mode. You know, this is not a red or blue, you know, situation. This is about green. This is about money. This is about making business or encouraging business, small and large, to actually put money to work in this economy and create new heads to the payroll. That's not being done because of what that gentleman just said. And I'm hearing it throughout business. I really am. From small business to large companies, CEOs come on all the time. And you know, when I think about it, I say, well, it makes sense. I mean, if I had a small business and if I were thinking about hiring some help, would I do it if I have no idea what my tax rate is going to be, that I have no idea what my health care expense is going to be, I have no idea who's going to be overseeing my business and what fees are attached to that? You know, so of course I'm going to wait. And so the longer they wait, the longer that we are looking at economic growth falling.
Time for just a couple more calls with Maria Bartiromo of CNBC. Craig is a Democrat in New York City. Hi, Craig.
Yes, good morning, Maria. I wanted to ask you, you said a lot of companies are sitting on their hands, but when I look at Apple, their R&D must be doing something, because everybody was in New York City was lining up around the block to buy their products. So if some people want to sit on their money for spite and cut off their nose to spite their face. There's nothing you can do about that. But also, you blame the president for Congress not getting together. I didn't hear you say anything about John Boehner. And since when was business ever a guarantee? Business is always a risk. So if you're not willing to take the risk, get out the business and let somebody else do it who's willing to take the chances.
Yeah. No, I think that there's a lot of blame to go around in terms of Congress. You know, John Boehner, the Speaker of the House, also should be providing leadership to ensure that a deal gets done. And you mentioned the Bob Woodward book. I believe that Bob Woodward has interviews with John Boehner and the President on how, you know, last summer we were all complaining about the debt ceiling debate and it just fell flat. And once again, you've got Americans hanging in the balance while these guys fight about the amount of taxes we're going to pay and the amount of spending that we're going to see. And again, you know, here we are at the same stalemate 1 year later waiting for this fiscal cliff. Now, in terms of Apple, Apple has been a very successful company and it makes products that people want. But let's not forget something. Apple is sitting on some $40 billion of cash on the balance sheet. Much of that money is overseas. And so that money is not coming back here unless there's an environment that is favorable for Apple. Now, I don't know, you know, where Apple is spending its money in the U.S., but I can tell you for sure there's a lot of money sitting on Apple's balance sheet that's right now overseas. And that's one of those companies that really, if they brought their money back to the U.S., you think Apple's successful now, they could really even be a bigger contributor to this economy by hiring employees. So, yeah, Apple's been a successful company. It's a proud American company. But let's not forget, if you look on the other side of your iPhone, it says designed in California, made in China.
Last call from Maria Bartiromo comes from Jefferson, Oregon. This is John on our Republican line.
Hello.
Hi.
Yes, I have. It's an honor to really talk to you. I watch CNBC from Squawk on Vox to the closing bell. I have a question. Is any of the money from QE3 going towards Europe's debt? And I have one more quick question. Why is gold going up when the Dow is also going up? It seems like the Dow should go down when the gold is going up. And I'll take your call over the TV. Thank you.
Maria Bartiromo.
Thank you so much, and I'm happy to hear that you like the programming. First off, on QE3, no, the QE3 is going to be the Federal Reserve buying mortgage-backed securities in the United States at a rate of $40 billion a month. So that's the money for the U.S. The issue is that does that lead to job creation? Does one equal the other? And there's a debate about that. A lot of people say that, you know, the Fed throwing money at this economy is not going to ultimately, you know, mean new jobs created. It's just going to mean money moving into hard assets and money moving into higher yielding assets like stocks, which of course has been the case so far. We have other money that we sent to Europe through the IMF, through other programs. So there is a, you know, an indirect money going to Europe, but it wouldn't be the QE3 program. In terms of gold, gold is a hard asset. Every time there's uncertainty out there, people flock to hard assets because they say, well, you know, I'd rather own something tangible that I can hold, that I can feel, rather than something that's not tangible. And so the uncertainty has pushed money into gold. And of course, it's also with the Federal Reserve pouring money into the economy and impacting the dollar, the relationship between the dollar and gold is also impacting gold. I think most, you know, money managers would say you want to have some exposure to gold, but gold certainly has been pricey. But in an environment where you know rates will be very low for an extended period of time, people want hard assets, and that's one of the reasons that has boosted gold. Not to mention, on a smaller scale, secondarily, there's demand coming out of India.
Maria Bartiromo, I want to read these two tweets to you, both related to what happened in 2008. This is Atlanta Progressive. We gave biz absolute free rein 2001 to 2008, and it led to devastation of economy. Why should we do that again? And Gary tweets in, do you think Obama has done all he can to prosecute those on Wall Street, especially bankers, who brought our country to its knees?
Well, I think these are, very important issues. For the first one, in terms of free rein, I don't think we should give anybody free rein, but I also don't think that, we should have an environment where businesses are afraid or, unwilling to spend money and hire workers. I think business is really, at the end of the day, the place where job creation happens. It's not government, it's business. So you do need some kind of an encouragement for businesses to create jobs. But that's not to say anybody should have free rein. And I would also point out that during the 2008 financial crisis, let's not forget that we have a structure in this country that involves businesses that are overseen by government, okay? There are, financial committees and agencies that oversee the banking sector, that oversee the housing sector, and those government agencies, frankly, were asleep at the wheel. I could remember years ago hearing Barney Frank say, look, everybody should own a home. This is the American dream. Just, let's let everybody own a home. And so this whole freewheeling idea that, you could own a home even though you don't have the wherewithal to do so was perpetrated and was sort of, pushed forward. And you have to also blame regulators for being asleep at the wheel, not just the bankers. Having said that, I know that, in many situations, the bankers let us down in a huge way. So no way am I talking about free rein, but I am talking about creating an environment that encourages them to create jobs. In terms of the second question was about a disaster. I'm sorry. Will you repeat the second tweet?
Yeah. I've already untweeted it. It was about the bankers, whether or not.
Oh, the bankers and the prosecutions. Right. Yes, the prosecutions. No, Andrew Cuomo once said to me, I thought it was really interesting. He said to me, Maria, people will go back in the water when they know the shark is dead. And the shark is not dead. We have not seen prosecutions from the financial disaster. And, I know Phil Angelides from the Financial Inquiry Commission is wanting heads to roll. But at the end of the day, it's very difficult to prove intended fraud. So, they've looked at this over and over again, and they're trying to prosecute, I'm sure. But they have been unable to prove that these guys were committing intended fraud as opposed to just being stupid and making mistakes. So there's a distinction between fraud and stupidity. Having said that, I think that more people would go into the water if they felt that the police were on the scene and that the administration, in fact, has, gotten some people under the umbrella to say, it's your fault, it's your fault. They've been unable to do that. Why, I don't know. It could be a resource issue. I mean, the Securities and Exchange Commission with Dodd-Frank is now overseeing thousands and thousands of new players, hedge funds, private equity. And so, when you have such a much bigger increase in what you're doing, in the workload, which the SEC has, and you don't have a big increase in the players and the employees at the SEC, you've got a problem. So I think, the SEC is overwhelmed. I don't think they have the resources. I don't think they have the people who actually understand the complexities of this market to actually regulate effectively. That could be one of the issues.
3 to 5 p.m. Eastern Time every afternoon. Maria Bartiromo is the anchor of Closing Bell on CNBC, and she's been our guest this morning on the Washington Journal from New York. Thank you, Ms. Bartiromo.